Okay, hi there traders, how are we going there? I hope you can all hear me clear and loud and clear actually. Got a bit of background music today, I thought I'd tart things up a bit, make it a bit more interesting. It's good having a bit of background music anyway. So if that gets a bit out of hand and it's a bit loud, just let me know if you can't hear me clearly. How are we all today anyway? Doing well? So we've got a few online at the moment, so sorry for running a bit late. Well, let's get into it. Welcome to TradeSetup in the live stream. It's the 27th of July. Now, if anyone that's new, we've got our places to see us. So Twitter in the top left-hand corner, you'll see the Twitter, the feed there. I think that's what you call it. The Facebook feed on the top right, and then you can link into us on the bottom at TradeSetup AU. Link into us there at YouTube. And if you subscribe to that, it is cold there, Wayne. If you subscribe to the YouTube channel, you'll get a pop-up every time we actually press go live button, so start streaming. If you don't get it through the TradeSetup app. Anyway, hope we're doing well. What we're going to look at today, we'll take a look at obviously the markets. It seems that my opinion is changing each day on this ASX. It's a bit choppy, but we'll take another look at that. Having a bit of a chat with that yesterday, but to Davin about the ASX200. It was looking a bit weak, and it's up until about yesterday when things may have turned around, but we'll just have a look. Also, just want to chat about, obviously, a few of the stocks we've got going. Anyone that wants to talk about currencies, just whack some currency pairs in there. I've got an example I'm going to look at for what we're going to talk about on the euro. So we'll have a bit of a chat about that, but I just thought I'd cover one other thing. It's mainly to do with, obviously, technicals and taking profits. I think I got a question a while ago. Beautiful, Brent. Well done. 10 points is always nice to take that out on the... is it the SPY, or just you trade the ASX on the CFD, or the futures, the CFD? Anyway, what we'll look at is... Someone's asking a question about targets. Can you put... it may have been Paul anyway. About... Through our app, we actually put what trades we've got open, and we put the stop levels. Someone's asking about putting a target up there. Now, I just want to discuss targets further because... Generally, when we open a trade, we have an idea of what the target may be, and that's a partial target. But generally, we like to let things run also. So it's really hard to know until you see the price action, and that's part of the trading, I guess. Learning the skills is, you don't really. I know it's traditionally you put in your buy entry, and then when that gets hit, you've got an automated stop level and you've got an automated profit taking level. Now that's okay if you're constantly running 2 to 1, but to improve your stats, it's always good to let it run. Now, that's something I've been working over. That's probably a key thing for me. Letting things run, that's been working over that for the last few years, I guess. Really starting to hone in on it. So, and I think that's a cool key skill between, getting some good results, getting half decent to be some decent results, is really just working on letting things run a bit longer. I'll give you a great example of what potentially you could leave on the table, a stock called VRC. Something I obviously didn't let run. Turned out all right, but I'll show you that later on. Well, let's get into it. Let's take a look at where the markets are at. The CFD. Oh, cool. I haven't traded the SPY for quite a while, so let's get my face up there just to keep it all interesting. Now, the XJO. That's interesting. I think it's this last price action that, well, it's probably moving it out a bit. This most recent price action the last couple of days, I think, is starting to show a few signs of life. All right, we've been watching this for potentially at the start. Is this clear? I'd have to thicken those. Is that a bit clearer when I thicken the bars up? A bit easier to see? You and your BSL. Got to admit it's going well. Let it run. Open her up. That's what I say. Now, the ASX, just back to that. What we were looking at up until probably yesterday was this. You can see that it's holding those lower highs. Now, I think we've just started to see some interesting price action the last, yesterday and today. It's really kicked up a bit. And after that washout, so it kept touching down around that 56, 70, 75, down to 50. You can see just this is a support zone through here. Might be easy just drawing it up. Let's get my favourite little tool. So you can see it was just touching up through there. Now, up until probably yesterday, what I was expecting is we've got a little level through 56. It's a whole number too, and you can see that the market's pushed up and then it pulled back. It touched down there a few times before washing it out and then start proceeding that new push higher. Didn't get too far, obviously, 59.50, and then it started backing off. This is what interested us when we got through there, and that's where I thought, okay, maybe this move lower highs, lower lows are starting to run out of steam when we got that little washout of this minor level. Okay, that little washout there, then we popped up, broke that minor anchor level to the uptrend, so you'd expect some consolidation or an up move, a start of a new leg higher to start attacking that 59.50. It didn't play out that way, and we still were holding these lower highs, and we were just touching down on at 56.75. Now, 2 days ago, bit of a washout of that minor level. I was expecting maybe a push down to 56, extend down to 56, wash out this low, and then pop back up. Good solid down day, and then bang, straight back up again. Pretty much up until yesterday, just because those lower highs were not convincing me of strength, even though the US is doing quite well. Now, as it's turned out, we've just broken through, and I think this is a key. Well, I'll draw that up a bit better. Just clear this up. So we've got this level up here. This key little minor level at 57.75. So, and especially after that spike lower below these lows, minor washout. It does it time and time again. You can see back here. That was back in beginning of Feb. It washed out that, and that sometimes just puts people on the sidelines. Maybe anyone that's short gets a bit of, or some breakout traders looking to go short just below there, thinking if there's going to be a stop run, the market's rolling over. This is a major lower high, washes them out, and then turns and reverses, and pretty much you probably expect them to have stops above 57.75. So that's what it's done. I think starting to show some signs of life. Anyway, it's got a bit of work to do. I think pushing up above these highs, I think it's around 58.30, thereabouts. Popping up there, then I'd love to see that lower high, and I think that'd be major confirmation. Then you get these MAs to start to cross to the upside. I think things will look quite a bit more rosy after that. But the ASX is starting to, showing some good signs that it's going to pop up and maybe at least attack. And I think it's done quite a bit of work through there. You can see that's a couple of months worth. So all that level and that little washout is probably expected to happen after this. The length of time that it's spent banging around between. Oh, it's a good part of 150 points, but still every time we popped up, we got sold off, pop up, sold off, making those lower highs, and then yesterday just broke through that 75 zone. Where are we at the moment? 94, 57.94, so taking 58. 1 point shy of 58 by the looks of it. So I'm expecting that to, start its run up to 59.75 and 6,000 potentially higher. 6,000 is a major zone. And we've spoken about this quite a few times. It's still holding the trend up, and if you look at the weekly, just go to the weekly chart, there's that key zone at 6,000. And I don't mind these, when it falls short a bit, has a pullback, it has to get a lot of traders back in, wash a few of these longs out, create a bit of discomfort for people. Short started entering the market, and then it's got that fuel to turn around and reverse and push back up. So I don't mind this setup at all. I think it looks great. Look where the weekly stochastics are. It's in that oversold. It was holding that support zone just above 56, and now it looks like it's on its way, and it's going to start targeting 59.50. And maybe with this type of move, falling short of 6,000 just here, that's a good little move. I think can just blast through 6,000, but we'll see. Could be completely wrong. Not usually, but you never know. Occasionally you're wrong. All right, let's look at just... Also, this is a 30-minute chart, which you can see some good signs. It's just popped up through that zone. You can see it's been choppy through here, holding up support. We send this out on the morning alert each day, just the different levels, and it's been not just been hard, it's just been a bit confusing. It was only up in the last few days when I thought, well, maybe this thing could roll over and just wash out down to 56, but only washed out a few points really, and now it's popped its head back up. And yep, that's a nice warm coffee too, Paul. Hope you got yours, mate, all lined up. So you can see that support zone is looking very strong. The more you test it, the more likely it will hold up. And that's where you get that washout. So when you test it a few times and then you wash it out and pop back up, it's always a good sign that you're going to head higher. So I think it's just a good thing to keep in the back of your mind, that type of price action. So really, that looks good. I'm liking that 30-minute chart, especially we got up through this 57.80 zone. This is a CFD, don't forget. So it's a bit hard to correlate that, but I mean the price action is probably going to be the same on the XJO. probably a little bit less of it because this takes into account overnight as well. So yeah, that's looking strong. I think it's going to start targeting 58.40. You probably get a few of these short positions to start building up with these lower highs. Going to get washed out, so that's a lot of fuel to start pushing back out of the market. So it's got some good potential to grind its way higher and really put pressure on these short positions that are built up. What do you reckon, guys? Believe me? What's everyone's view on this? I know Paul, you're still looking at a bit of a tanking. The US is having some good results. There's a lot of factors why this could just keep on grinding high, especially in the US too. Keep on dragging us high, and that's maybe what's starting to show out here. We're looking at interest rates in the US. They were looking at a potential rate rise, but I don't think that the inflationary figures are as strong as what the Fed was expecting. So maybe another rate rise later on the year could be over. It may not come about. That's not too bad for equities at all. It means that they could just keep grinding high. There's still money to go into equities. You know, where else is going to go? What else is performance on the rise? Some good cash to go up there. Evaluations in the US are outperforming this round of earnings. So far, so good. They're doing quite well. I think as a whole, beaten expectations. So they basically needed that to keep this run going. I think that's what a lot of people are thinking. If they don't, through this earnings season, if they don't perform, you might get a bit of a sell-up. But the thing is, they've been performing and they're still looking quite good. So this market could keep just grinding higher. It hasn't got interest rates to worry about too much, as of yet anyway, which could really cap the market. Financials may not be the best place to be in the US because of a lack of interest rate rise. They're going to do well if there's an interest rate rise, but just trying to think. I mean, so it's got a bit of a positive outlook. I mean, something can come out of the sidelines, which always catches people, and this market can just roll over, head south, and it's going to be just an excuse to sell off. But we'll see. At the moment, the market's still grinding high. Dow an all-time high as of yesterday. I'm pretty last night. We got the Dow. Yep, all-time high yesterday. That's still got potential. I mean, especially after this base that it put in. Long, choppy action, and it's just grinding high. It's getting extended. No one could argue with that. But the market can keep going. Never second-guess a turnaround. Always try to trade what you see. That's the S&P. I don't think it closed at new all-time highs overnight. But I think it made new during the session. Yeah, it made new highs during the session, but closed pretty much break even for yesterday, I guess. But looking good. Yeah. You're talking about, Brent, which one are you talking about, the ASX or potentially the US? Anyway, we'll wait for an answer. I know there's a bit of a lag in this the YouTube feed, so sorry guys if things get a bit slow. Right, any questions just on those before we start getting stuck into... We're just going over what we hold. I think we've got 9 through TradeSetup. 9 out of the 10, so we only really like to have anywhere around 10 positions or 10 alerts running at any one time. We've got 9 at the moment. We've taken profit on 3. Managed to take one on Coke yesterday, which was a cracker at 20. Wasn't looked too good at the start, but I think it traded to 19 yesterday. Lower 19, I think probably about an hour or so after we sent out that partial exit, and it's just popped back up. So we may get a bit of profit taking. Sorry, not profit taking. What am I talking about? Well, maybe profit taking on the shorts. This thing starts climbing and closing that gap. You can see. Maybe you can see it. That gap that it could close that up to 850 and then roll over, or just build another lower high and then go lower. It still looks pretty good. What else we got? So we've taken that on Telstra at 410, which is pretty much where it is now. And we've taken one on MBE. Touched at 10.5 a few times. So between 10 and 10.5, you took a profit. Great. That's looking good. I got a feeling this thing's going to start going for 10 again and break through it. Don't forget, if you've been listening to us in the past, when you're looking at stocks that are valued under 10 cents, they go in increments of 0.01. Brent, are you talking about this one here? That's called Trade Direct. So that's our platform on there. If not, this one's called Spark. not so much a trading platform. This one, it's ASX shares, but it's all you get everything else there. You get all the latest news releases. You can view what they do, analyze a company. You get all the info about the company, so that's good. Oh, this one's called Spark, yeah. All right. So positions, what else we got? I think I was saying, I can get rid of that, can't I? I think that was it, wasn't it? All right. So anyway, we've got a few. What else have we got there? A couple of new ones. We've got CKF. Look, that price action looks great. We're in somewhere around 80. We're just going to remember 86, 586. It's up at the moment, but would like to have that to continue on. So I think that's still holding a beautiful high low. That price action is really, really nice. IWF, IFL, that still looks good. And the reason why, this is probably not your traditional, if you've been watching for a while, not your traditional entry that we use, but I could just explain this, I guess. The reason why we like this one, I mean, you look at that weekly structure, that's great. It's had that two legs down like we like to see. One, contract up, down again, and then it started holding higher lows. And then you've got this resistance level that ended up breaking through. It's pushed up, pulled back on the weekly basis. So we're in a nice little retest area, that 940. If we get down to the daily. So just bearing in mind that's a nice retest area. So you start holding another daily high low. And that's just really that confirmation. So it's the same type of price pattern, but on the upside. And you've got in account that the weekly's on your side, and the daily, you can be a bit more aggressive on your entries. So that's that one. That's IWF and looking good. But the rest of them, we've probably spoke about before. They're all doing quite well. So far, so good. We'll see how it goes. All right. Any questions on any of those? So what I'll do, I'll run over. Just had a bit of a chat about targets and the difference between putting in targets and not, and just analysing it, on the fly, I guess you could say. You've got to have levels in your head of what you could be targeting, but I'm not a big fan of putting the hard and fast target in there, because you never know how strong or weak the market's going to be. So I think it's good that we have a bit of a chat about that. Because like I said, someone, I think, just asking about should we put the targets on the app of what we're looking at. We could, but then if we do put them in, for example, then people might take that as gospel and put the target in, but we may not actually send out an alert with the target on, if that makes sense to you. Because we want to let it run, it's looking strong, don't put in a partial target when things are looking great. You just take it when you start to get a bit extended, it's starting to slow down, then take a partial off, and then you want to open it up for the rest of the trade. And that, like I said before, that's been my major weakness, to be honest, is opening it up, opening a trade up. And that's what, since I've been working on it, it's really improving the skills. Also improving the returns. Okay, you can do it right by just hitting the targets, but if you really want to maximize your trading, occasionally you give up a few extras by opening it up, or you give up a bit of profit, but it's those one or two that really run on, which are really they're going to improve your stats dramatically. I'll give you well, you might as well kick on to what I'm saying. I'll give you a good example of one that I didn't let run. And this kills me. I might have spoken to a few people about this one. This is VRC. Might just have to make it weaker. So what we're looking at VRC, you can see how well that did. We were looking at in here, I think. All right. I'll try and get it. Oh, that's probably. So I'm just trying to drill it in on it a bit. I'll explain. If we take this, just looking at this chart, I'll explain what we did and why. There was an alert sent out yesterday on the CCL. I think it was sent out earlier in the morning at 8:20. You take a partial at 8:20. So let me just check all that. It did go out yesterday. Don't know exactly what time. I think it was around about 10. So we took it. We'd send that just a few minutes after the open. Alrighty. So this is no, this is not it. This is called Vault Resources. So as an example of why you, yeah, this is a great example. So what we're looking at is this, you know, bouncing off that support. You can see it. I don't mind seeing this this sort of price action. You can see that move up was quite strong. The steepness of that was quite strong. Now, I think it took a bit longer, and it really didn't give up much. So that was, you can see that any push down was starting to get bought up. Another push down, you know, I know there's lower highs into it, but then you get that contraction lower, and then you got this pop up. Then it's come back down and retest, and it's retesting a key, not a key level, but it's just a level that's formed at 3.2 cents. Then, so really what you're looking at from there, or the way we're viewing it, was once it pushed up above this level, then you start to think, okay, it's coming out of contraction, and you can draw, you know, across the tops there. You know that's contracting lower. It's hold up at support. You've got that breakout. So this is a traditional, anyone that's followed us, just a traditional type of entry. We like this type of setup, breaking through there. You know where your high, low, where your risk is going to be. I think it was 4.5 entry from memory. That's a beautiful little entry, and this is a long time. This is probably over a year ago now when we had this alert, when I put it on. Now what we got out of this was somewhere up here. I think we took an exit somewhere around 5.5, and it was a conjunction of a couple of things. Me not letting it run, and just having the risk way too tight. I think we took a partial and then just left it. Oh, okay, I'll have a look at that, Annette. All right, so we've got so this one here we're looking at has popped up to 5.6. I think we'll show you just in a minute. Great little entry, looked really nice, but really that was just the stops were too tight. We got caught on that one, and then you can see pretty much what happened after that. If we just extend that out a few days, that really kicked off hard. So this move up here, I think it broke through that high. Was it high 5.7, and that high was 5.6. So it popped up, and then the stop. So we took a partial just there. That was all good. It was about 20-something%, which is nice. Then we had this little pullback, and you can only see, if you can see these few days. Just in here, it's probably a bit hard to see. Oh, I've done it again, haven't I? It's a bit too far. Sorry, guys. Just these couple of days, this pullback, a couple of days of nothing, and then another pullback, that was where the stop was. So the stop was really tight on that one. And this is what I'm trying to say, when you're letting things run, we should have had that stop. When you got the breakthrough here, we've taken a partial up at a level. It's not a key level, but just after this price section, not so bad taking a partial, but the risk should have been well under 4, you know, below this higher low, and just trying to open up the second half of that trade, or at least, you know, open up some of it just to get those returns. And really it kicked up to all the way to 14. So it was pretty much from a 20-something%, 22, 23, 24% gain, turned out to be a 300% gainer. So you can see what happens when you don't open it up. If you have a hard and fast profit target, for instance, if we just put in all off at that level and had a hard, you know, 2-to-1, say, we know our risk, break out of this. If we just go back to break out of this high, we've got our risk below there. That's 1. 2 is about 5.7, say. If that was 2-to-1, we're always going for that type of style. Okay, that might be okay, but you can just see what happens when you have a hard and fast profit target in there. You just hit you put a limit order in there, you let it go, and then it gets hit. You're all happy for about a few days, and then you can see it really kick on from there. So really what you're trying to do with, I think, any trades, even yeah, I would go down to the day on this one. You can, if you trail it on the half, you know, even on the hourly charts, intraday, doesn't quite work on stocks as such. I think it works good. I'm guessing you trade a bit of futures, Brent. Futures and currencies, it works nicely on that. On the lower time frames, because you can just hit these runners that go 100 pips on the, you know, on the currencies, they do really well, a couple hundred pips. And if you can follow that up on an hourly chart even, it's quite well. You can work it off, the entries off a daily or 4-hourly chart. So I would just follow it up on a daily chart and just let it run. So in essence, the way we should have attacked this one, if I can draw that up, yeah, intraday, no, that's good. So what we're trying to, I guess what I'm saying is, what you're trying to do with any of these, you know, when you're really trying to wring out as much profit as you can from any trade and opportunity, and you never ever know how it's going to turn out. And this is what I say about, if you second guess And to be honest, that's what I was trying to do here, just second guessing it, and just, every time you have those errors, and it's one of those times if you do second guess it, there can be a nice run like that, and you can really give up. You can leave a lot on the table, as in the case of VRC. So what you're trying to do is really open up. It's always a good idea, you take a profit. I was happy to take 20%, I think it was on this one, on the first half. But it's really that second half of going way too tight. I'm not opening it up. I got tagged on that little pullback here. Got stopped out there. It was pretty stupid trying not to have a loss on the second half, putting it around break even or something small in there. Got tagged on that and then it just took off. So really trying to open it up. Now the way I would attack this, because you never know how far it's going to go, and that's why you try to trail it up there rather than go, okay, if it hits 6 cents, I'll just take it off. I'll take the rest off in the second half. You don't want to do that either. You want to let the market tell you. And this, you can see these moves higher were starting to get a bit extended, sharper. Those really accelerated until you got this really big, strong move. And sometimes you look at the volume too. I'm just guessing. Yeah, the volumes was really starting to increase up there. Up at these, nice extended candles. It really started to accelerate, starting to blow out. And when you get that type of thing, it's probably not a bad idea. Instead of, like I said, taking some off the table or closing out, you can. I mean, you're sitting on 300 profit. In this case, it's not so bad. But in other cases, you're probably better off still rather than taking the second half off, because again, you just don't know what's going to happen. Tighten it up a bit. I always like to tighten my stops up now. I've got a rule of thumb. I try to really manage myself as well as the trades. Take a partial on the first. I don't mind having tighter risk until you got a partial, and then try to really tighten it up. I don't mind tightening it up and then really start to open it up on the second half. So once you've taken a partial, open up, so having it below a major key, high or low, where if it does come down there, it's got to prove you wrong, it's got to prove the trade wrong, and then you're forced out of the trade, but so be it. You've still got some profit. I'm guessing your partial is going to offset any loss you may have, especially if it's a 2-to-1 partial, and then, you might give up a bit, and then sometimes it's going to come back on reversing you, but it's these type of things, these type of trades that you really want to grab a hold of. And this is what improves your statistics dramatically. Now, the way I would attack this as a final note, nowadays, now that I'm getting a bit better, is, sorry, let's just draw that up. Is this all making a bit of sense there, guys? I hope so. So you can see we've got a level up there which was broken around 5. We took a partial, I think, just up here, and that was really just a random partial. Could have really left that first half go anyway. The entry was through that breakout. The initial risk was just below here. Could have easily followed that up. As soon as you get this kind of contraction, and then you start to get a breakout of that high, so it goes into new high territory, raise your level to the higher low. Then you've got to push up. So at this stage, you've really got to risk that this reverses all the way back on you, because your stop's pretty much at break even at that stage. If it was on a partial, if you took a partial here, but if that was the full amount, you've got the full amount, your exit's pretty much at break even, and at that stage you would have sitting on 200% gain. It is going to be hard to follow it properly, and there's going to be a lot of times, you could have taken a bit of risk that's just below that little red candle there, but it's not a confirmed high or low. You want a couple of candles, a couple of lower lows, and then it pushes back up. Here you've got a couple of red candles and it starts to pop back up. Another attempt to go negative off a lower high. It couldn't, and then that's accelerated. So there's your second, once you get to that stage, it breaks out the high. As soon as it pops out the high on this green candle, that's when I would be looking to raise my stop just below, I think it's 8 cents on that stage. So that way, if you've got it at 4.5, you're at 8, you all of a sudden sit on around 100%, bang, straight away. And that's probably the best way, I would say, to raise your, to follow your trade up. This is, whether or not you're taking a partial, it doesn't really matter, but even on the second half, if you're following a full trade amount up that way, great. If you're following a partial up, it's the same type of approach. You got this big blowout, so obviously you may be a bit concerned at that stage. It's not a key level here, but you're just trying to see signs, and then when you've got, see this type of price action, you've got this push up. So you got this big pullback, push up, pullback. You've got a high low here at 10. And then as soon as it breaks through this level, then you've got this type of price action that's starting to grind high. That's, to me, that's not the same as what we've seen here. This is just bang, bang, bang. Here we're starting to get a big blowout. So when you see this type of structure followed by this type of structure, I would expect to be, I'm expecting just a lower high. So if I was following my full amount, I would ideally like to tighten it up. So you can just tighten it up around here, or if you've got a partial, you might want to tighten up. Your main risk is going to be below there, because at longer term, if that breaks, we're going to get longer term contraction, and it's going to be a lot of time spent in the trade if you stay in it. So I would much rather take off a major lower high, as in at 13.5. I would much rather take everything off and reassess it from there, especially if it breaks down below there. For a partial, I'm still trying to squeeze out as much. If I haven't taken a partial here, at this stage, I want to get it tighter rather than looser, if that makes sense. Because if that's a lower high compared to this, I'm expecting some decent correction. So I'm expecting this to be targeted. Rather take a partial here, see what happens, and if you get stopped out in the second amount, which I think we did in hindsight, let's drill out. Yep, you can see how that's just pushed down. And then you just, that's the time when you don't want to be in the trade. You've squeezed out as much as you can. You followed up correctly. You've given it every chance to work. And in that respect, it actually did work out quite well. You probably could have booked at least close to 200%, whether it's on the second half of the trade or the full trade. You know, anywhere from 150 to 200%. That was a fantastic little runner. So you can see what I'm saying about if you don't let it go, what you're leaving on the table. Does that make sense there, guys? If anyone's got any questions before we kick off into something else. Yeah. See, Brent, when all the money you're giving up when you open up the stock, that's why I'm always a big fan of taking a partial. I like to book a partial. I like to book something so that way, you know, I don't like to just book straight away. I like to let it at least run for the trade to work out a bit. So you at least get a few, you know, you get a few percentages up your sleeve. Get a few percent up your sleeve before you look at a partial exit. But that's the whole point. I mean, there's going to be times when you let it run on the second half, for instance. If we had that second half and we got a partial, we might have got stopped out somewhere up here around 10, 10.5, or just at 9. You are giving up a bit. I mean, that's obviously, but there's going to be times when, you know, you might, if you got that mindset on this little pop-up here, you go, okay, I'll take it, and then it does this, and it just keeps going. There's going to be times when there's going to be the runners. So what we're looking at, ideally, is to try to take advantage of the runners. We don't want to miss out. And I've known that from my stats in the past. The more you get. Yeah, that's true. Now, I've always found with my stats in the past, I would always take stats. I don't know if any of you guys have actually followed Davin a lot. But years ago when I was learning from Davin, I think it was way back in 2010, 11, they always talk about stats, and there's another guy we learned from in the US, always talk about taking your stats just to see what, I mean, because it's pretty obvious when you're trading and you're not taking your stats, you tend not to see, things don't stand out as clearly, and it's, everyone's got different problems they might have, or different challenges you face, depending on your personality, depending on your makeup, or the way you trade. So everyone's different, not everyone's the same. I mean, between Davin and I, he's more aggressive than me and will let it open up more often. So he takes it hits more often, but he gets those bigger trades that can really work out. So every time I give up those bigger trades, my hit rate might be better, but he's going to get those bigger rates that really kick on, and they end up over time. They're the ones that are working for you out of 1 out of 20 trades. So when I'm taking my stats, I used to take them in groups of 20, take the stats and write a few notes of what I was thinking, and why I did stuff. And then what I would notice is at least 1 out of those 20 trades, even if I got 50-50, and I might even be getting 1.5, 2 to 1, so you're profitable, but there's at least 1 out of 20 trades. This is mainly when I was trading futures or currencies. 1 of those 20 would really run hard. So if I have a 6-point loss, for instance, I'm looking at 10 to 15 gain. You don't always get that, but on average you're working at 1.5 to 2 to 1. That was my average stats, but there was one that would go on for about 50 pips. So you can just imagine if you got an extra 20, 30 pips out of every group of 20, that just improves your stats quite a bit. And there was no reason for me to get out. Now, I would just take it. It would start slowing down and think I'm up 15. Okay, let's just take that. You know, don't be greedy. You know the old, everyone, you always hear that sort of thing in the back of your head. Don't be greedy. Don't be stupid. This one could turn around. So you're always looking negative when you're in a trade. The way you act when you're in and when you're out of a trade, two different people. It's like a schizophrenic. I am anyway. I know that I'm the world's best trader when I'm out of it. When I'm in the heat of the action, I've got the same type of little thing sitting on my shoulder in the back of my head saying, don't be greedy, get out. And that's why I've been really working on doing this type of thing. You know, like I was saying, follow it up, open it up and really let it work for you. Because I know that the way I look at the markets and the way I analyze it is going to be good. And I know the way I analyze it, it's always going to produce a really good, it's going to produce a good runner. And eventually I'm going to get, just the way I analyze it and where I look for my trades, I know that I'm looking in that zone where it's the unknown. I know I'm looking for that next leg up. A lot of the times it doesn't happen like I think, but a lot of the times it does. And I know from my style, if I just try to let it run, I'm going to take advantage of those runners. And I know that's going to improve my stats. And that's the same on any market I'm trading, whether it's, stocks, looking at currencies, looking at futures, or what else, anything else, I guess, commodities. You know, same patterns. I'm looking for the same thing. And as long as I keep working on that, I'll probably get stopped out a bit more. Instead of 60% strike rate, I might be down at 55. Still good. But by giving up 5%, on my strike rate, a little bit of profit, I'm potentially going to add to that dramatically. And I think the difference is black and blue, and black and white. I'm not really good with my sayings there, guys. Anyway, but does that make sense to everyone? What the aim of trading is, and that's what what everyone, anyone should be doing, I guess. Anyway, I just wanted to, as a bit of an example, I found the euro really handy. This euro we've been talking about for quite a while now. Or maybe I'll go to an hourly chart. The euro is one. It's a great example of, we've spoken about it in the past about a short squeeze. The market, everyone sells into these lower highs, lower lows, but they're on key levels and they're not breaking key levels. So it's really important to know exactly where your anchors are, because if it doesn't break your anchor level, say if I'm trading off a 30-minute chart, I tend to look at the longer term anchors. Say it could be 30-minute. I might be looking at a 4-hour chart, for example. I want my anchors. If my anchors on my 4-hourly chart are not breaking, that longer term trend is going to come back into play sooner or later. So I don't want to start shorting into a 30-minute chart, for example, thinking this thing's going to roll over, and then it just turns around and bites me on the butt. And this is what, traditionally a lot of people do that. They see this type of price action, go, oh, this is going short, and they're always looking for that big trade. Sell into it, and then it turns around, holds a high-low, bang, and that long-term trade kicks in, long-term trend kicks in. You get the high-low play out, and they're getting squeezed back out of the market, and they do it here again. If I can get rid of that, because it's annoying. In here, lower highs, lower lows, that's just a pullback, contraction, then you've got a high low in here, and then off she goes again. It runs up, lower highs, lower lows, runs up, lower highs, lower lows, runs up. So ideally, if you were trading this one, on this type of leg, if you bought it, say, 111.78, I think we sent an alert around that stage, not a buy entry signal, but what we expect to happen. It played out nicely. A break up through here. Let's just extend that up. It's not as easy on this. All right. So what we're looking at this stage, just when we alerted it here, was a bit of break up through 111.78, a bit of a pullback, and then looking for a buy entry signal, whether it be a break of the high, with your risk just below that high-low. You had to take a bit of heat on that, but then at this candle, bang, things just were looking up, looking beautiful. So when you're looking for partials, you could have taken a partial up to here, but if you're doing it properly and just letting it run, you might have got stopped out way up here, 113.29 from, say, 111.80. What's that, 140 pips? That's a cracking trade with 111.90 down to 60. Say 40 pips risk, you ended up with about 140 pips gain. I can't even, that's at 3 to 4 to 1, 3.5 to 1. That's great. And if you followed that up properly, there was no reason to close it out just here. You got a pop up, your stop may have been raised up to here. When you got this bit of a pullback, it popped up through this high, you raised the stop to below this high low, still didn't get tagged, and then it just took off. So trading it properly, raising your stops, you've got to be confirmed. If this thing popped up, then roll over and tagged you, you'd probably find it's going to roll over and retest this support. But instead, it played out really nicely, and we've got a reason why we're looking at it. We know that the shorts are built up. It's traded on this support zone a couple of times now, double bottom, whatever you want to call it, retest fail like we do. And then it's taken off, so you're trying to follow it up. Maybe got stopped out of a partial on this little spike lower, retested that 11300. And then you could have just but you could have really, if you wanted to, you've taken your partial there, you've got a risk-free trade now. If you got your second half, you might have just kept it, look, you could have kept it way down here, you could have kept it below this level, below that little stop there, because you figure if it's popped up and it pulls back and trades through there, okay, maybe we've got a problem. And that way it keeps you out of trouble when you got this contraction. Or, on your second lot, on your second half, you might just take take it off when you get that lower high in here, and then you reset and you're ready to go again on this, pretty much on this entry when you got this high low, break up out of contraction, and then you're looking for the entry. Whoop. You could have been somewhere just in here. Is that making sense, guys? Just the way you could attack it, and that way you're not taking too much risk. You know exactly what your risk is, and you're trying to take advantage of, this is a leg up, contraction on the longer term. You're trying to take advantage of the next leg up, and then keep out of that contraction. You could ride it if you've got a partial, but ideally, I would like to just try to take a partial on any sort of minor move back, and then see on any major pullback, finish the second round. Hope that's making sense, but good way to attack it. Anyway, without further ado, anyone wants to look at something, just whack it into the chat function there. If there's a stock that you want to have a quick look at. Yeah, a bit of a long-winded explanation there, but I hope it makes sense to everyone. I think that's the difference between really getting good results, or even average to good results. But when you're letting things run and really opening up, it doesn't mean there's a bit of a science behind it. You don't just let everything run and hold everything. You've got to know where your risk is, and you've got to know where you're going to get proven wrong. I mean, if the market proves you wrong, then you want to be out. For instance, if you're buying it up here on a little break of this minor level, I don't know if you can see that, it pops up, we've got our stop below that low, because I know if it gets down through there, I'm wrong. I may have come to this trade late, I want to buy it, but I know I don't want to hold it past there, because with my analysis and the way I look at things, I'm expecting a deeper correction. I'm even expecting potentially nothing to happen for a long time, which is what's happening now. You spend a good part of a year correcting all the way back down to 4 or 2.5. So that's where you just really don't want to be in that trade. So there's buying and holding. I think it's really it's not the best way to trade. There's a reason why you can buy something. It could be any reason, but I think you've got to trade it. Anyway, anything you want to look at, guys, just whack in the chat. Any codes we'll take a look at. I think we'll kick it off with Paul's. What do you got there, Paul's? ASL? I haven't looked at that for a while. Just looking at where we're standing at the moment. Yeah, up she goes. What I think with this one, Paul, I think we've spoken about this before. Let's get this on a bigger. The reason why I like this, it is getting a bit extended at the moment, but like I said, I'm not too concerned about that. Like I said, the market, when the market's in an uptrend, a longer term uptrend, even though it can get extended, it can stay up there and just keep ticking away. So that's where you don't, like I said, you don't look at your stochastics and go, it's overbought, I'll put in a profit target, because they can just keep on going. It could be a lot easy, it could be very easy to get more out of the trade. But if we just make, well, it didn't work. I just want to say where potentially this could easily go. If you're taking, I don't know how you're trading it, Paul. I know we've probably spoken about this. I like this as actually could have a lot to go. For me, you've got your base where this leg was built. Okay, so you broke out. Everything's looking great. That's your move down, pop back up, move down, retested the lows, gradually pop back up to a high. That's your anchor level to this move down, and then it come back up, broke it. So really, when it breaks that anchor level, you're looking for an entry long, or it could easily just pop up, touch the anchor level, bounce out. That's why you don't preempt it. You don't, it depends. I guess keep getting myself confused. It depends how you're trading it and what you're looking for, where your risk is, how you analyze it. I mean, you could be looking at, I wouldn't look at that as an anchor level. I just look at that as noise because it hasn't broken this trend up yet. You could have, if you're trading it through here, that's great. You know, you've got the start of a nice little move up. But I guess what I'm saying, if you're bought it in here, which we were looking at it through that type of scenario, breaking out of contraction, potentially through here, then I forgot all about it. It's on its way up. The way I would attack this, where it could be going to, and again, taking that leg up, which takes it, say, just as a, what's that from? 10, say 20 up to 170. What's that, 150? 150 from 120 is 270. Yeah, so say up somewhere around 270. So that's how I would project it out. So I would be holding this thing, just try to wean it out. Even though it's extended, I think if it goes from 2, it's potentially got this next leg up, especially the amount of time it's been contraction. This is a weekly chart, about a year. So that's about a year before it started building, you know, it started moving up its next leg higher. I think this could easily pop up to, you know, 270. So this leg up, and you just try to follow higher lows, higher low, depending on what you're doing with your wrist there, Paul. But it's looking great. All right, MFG. This is Magellan. This is something that we've got. When I have had my eye on this, that's flicking it back to weekly, well and truly in an uptrend. So if I was meant to look at this if I'm looking at this with fresh eyes now, so I'm just drinking my coffee before it gets too cold. Looking at this with fresh eyes just at the moment, let's get rid of the volume. All right. So this is what I always like to do if I'm looking at a trade. I think, what's the potential? For me, it's all about risk. You know, like we said before, we're risk managers. We're just trying to manage our risk, and then, you know, use your techniques. Yeah, bub. I think I learned that a while ago there, Clement, and I do like it. I'll talk about that one next. I was chatting about dabbing with that, and the only reason we're probably not sending an alert on that, bub, as a buy, is that we've got 9 positions. It's got more risk than what I'd like to put for the 10th position, if that makes sense. But we'll talk about that in just a second. All right, so what we're looking at with this here, it's quite clear. You've got some key levels. $20, it held a high low. I mean, that was awesome. That type of pricing, which is chopping up, it's come all the way back down. So this point here, you've got the double bottom. All right. So at this stage, yeah, you could have been buying it, and I would have been looking at maybe it's chopped down, now it's washed out this low, or maybe a retest, then it's pushed back up, took out the high. I would want to see a higher low and then an entry level if I was going to target it at that stage to push up to 20 and above. Instead, it's come all the way back down and retested 20. That's fantastic. And when you see after that, once you see that, see how that's got a narrow range, it's below this high, and it's well above this low at 20, so it's between, say, 23 and 25, a $2 range, really. And it spent quite a bit of time in there. Any selling was getting soaked up by the buyers, and you can see that starting to curve back up. How do I draw that? I just want to draw what we're looking for. Well, that's not a good color, is it? That type of cup and handle scenario, you've got it up, this type of stuff. That's horrible, isn't it? Not very good with my mouse. That, you can see that arcing type. You can see that's gradually, you know, sellers are coming back in again. They think, oh, this is going to roll over. Last time, you know, popped up through the high and it come back all the way back down. You know, it's struggling again below that high. It's potentially a lower high. And as it comes down, it starts to curve up. That's when buyers are stepping in around 23. And that's a solid sign. For me, that's an awesome sign that this thing's going to go higher. So all this into account, even if you got through the highs there, that's coming out. You could have traded on the daily basis. Are we on the weekly? Yep, we're on the weekly. You can see that. So at that stage, that's what I'm looking for. And then I'll be looking for it to at least tack the highs and see how it reacts. So I just want to see how it reacts around those highs. The fact is it actually blew straight through there, which is nice. Where were the highs? 28. God, I did it again. So we've got these 28. So that's our highs. So if we were looking at it in here, that would have been a beautiful little, you know, your risk is here. So as an entry wise, we know that, just remember that weekly, you got that, that's your curving. You could have taken an early entry. I don't mind that at all, just because of the way this market's reacting. So you've got a major double bottom here. You're looking for it's pulled back one, tried to go high, couldn't, had a slightly deeper correction, but it's not really doing too much. You know, then you got that lower high here. And just, this is the story we're trying to build for ourselves. You got the lower high in here, it's retested that low, it hasn't gone anywhere, it's come back up, retested that high, pulled back, and it's building an inside high low. I love those inside high lows, considering what's happened in the past, just remembering what's on the weekly chart. Remembering this is potentially, we're aiming to buy into that potential major high low, which is all this region. Then we've got some daily high lows. So buying on this breakout here could have been awesome. And then we know our risk is just below here. Probably had to ride through a bit. It's popped up, probably 1.5 to 1 on that stage when it got to 26. Come all the way back down, test the breakout, and then gone again. So if you missed that first entry, there's this little inside entry again, and that inside entry I love, especially in context to what's happening on the weekly, because as soon as you get through these highs at 25, that's a confirmed major high low. All right, so trading into a major high low is a very high probability trade. You're trading off this daily chart for your a refined signal, I guess. You know your risk, you know exactly where your risk is going to be from an inside entry. And that's really started accelerating, and it pretty much punched straight through those highs at 28. So what I would be looking for now, you know, this is really a continuation of that weekly. You've got that weekly, it's busted through the highs at 28. You've got a pullback like you expect, a bit of heat coming out of the market. And don't forget, at this stage, we're buying in the unknown. It's becoming a bit more known there, but there's still one good leg up. There's still potential for another continuation trade higher. The MAs are on your side. If we go back down to the weekly, it's a great entry on a weekly basis, you know, down towards that 26. So we're looking in this zone here for the potential continuation trade. So for me, I would want to see it pop up through 27.50. Just go back to that daily chart. That's my level there, 27.50. We break up through there, then I'm looking for my entry setup. And I think you can take it to be a bit like an inside trade, like we said here, with off the high lows, below these major highs, which is below this major high, 29.50, and then just go from there. Just 1 second there, guys. All right, just had a visitor. Anyway, does that make sense what we're saying there? So I'm looking for this as a continuation zone. I don't know where. All I'm really looking for is somewhere in here. I don't know what, but I know what I want to see happen. So I'm really just preparing myself. Keep an eye on this one because I think it's got all the major longer term structure. The daily structure is looking great. Everything's looking really, really nice at that stage. So I think this is a good one to keep an eye on MFG. And it really just comes down to, you know, where our levels are. I'm looking at this 27.50. That's what stands out to me. Let's pull back to the MAs, even the weekly MAs. It's a great zone somewhere in here. I want to see that, you know, so that's your 27.50. It's come down. It's been chopping around. I'm looking for this. I'm looking for it to pop up. If it does it from here, off a higher low like that, and then I want to, you know, I'm potentially looking for a buy like that because it could be an inside buy, a bit like this one in here. Does that make sense? If not, sorry. All right, last one I think we'll get onto is Bub. Have you traded this one? Did you have a look at this one, Clement? I don't know if I mentioned a while ago. I bought this one personally. We didn't alert it. I bought this one somewhere through here. Let's just go over it. zero and understanding how we're trying to set up our trades and why it's important to know what the longer term picture is, what the shorter term. The two reasons for looking at the longer term picture, well, the two reasons I think are important. You want to know whether you, because there's no reason why you can't trade. You can't buy it when the weekly's going down. Ideally, for the longer term trade, you want to buy the weeklies up. You want to buy it on a pullback when the dailies pull back and then going up again. So you want to buy it on the rise. If you've got the weekly in an uptrend and you're buying the daily in an uptrend, great. Then you could really let things ride. But if you can actually buy something when the weekly's had a pullback, you can buy it, make it, but you've got to really be on your toes. You just got to know exactly what that weekly chart is telling you. So that way you're just not going to buy and hold and think this one's going to the moon, but the weekly's actually ready for a second leg down and you bought it, you're holding it, especially if you don't know what you're doing with your risk. That's why I think it's important just to build your trade and build what the outlook is. Now, in saying all that, we know what Bub's done. It's gone smacked up. And so when I started looking at it in here, it's popped straight up. Good news. I mean, looked at the fundamentals. You'd be proud of me there, Paul. Looking at what the fundamentals were doing and what the cause of that was. Good news. So you expect, okay, if they're having good news, there's probably going to be a spate of good news. So I want to be in this, taking advantage of that next move higher, potentially more good news coming. You can see that it's had that push up, pull back, minor pop back up, struggling. At this stage, it was just struggling. If you can see that. And then we had this move down. So it just took out these lows. All right. And then it just built this low through here. What I'll do, I'll draw it all up properly so it's clearer. So now at that stage, when I started looking at it, I've got myself two levels. So it's chopping around here. It's tested this a few times. So I was looking at it before, just before it popped up through here, through 16. I'm looking at this thinking after it gets through 16, I'm starting to think, because it's not really a deep correction, these secondary move lower didn't wash out that low by much at all. So there's still some positivity. There's probably just people willing to try to get a few of those sellers out. Yeah, no, I always do, Paul. I probably don't like to tell you. So at this stage here, we're just looking for that. I think it's a really shallow break of that low. So I think there's still some positive news. You would have expected, especially after that smashing higher. Bit of profit taking, the secondary buy. People are looking to test that high. It really didn't. They got caught in here potentially, and then it's broken through the lows. You know that there's going to be people washed out of the market. That's what it's done. And especially, we always look for, 1, 2, those two legs lower. And it did play out that way, but this second one was really shallow. You can see that the angle of descent was really shallow. It didn't break out the low. So at this stage, I've got my two levels. I want to see it pop out through there first. And then what I was looking for is that high low, which played out beautifully. Bought it through, I think it's 16.5. When it traded 16.5 off that high low. And then really I was gunning for just to see how it reacted around that high. It pushed through it, only mildly. So when it breaks through it and then pulls back, then I'm looking for that second leg. I'm looking for a more powerful leg. If it touches it, a lot of the times it retests it to the spot or maybe a bit lower. I'm not too positive. But when it breaks it out, it washes out. It's like clearing the way for more buying. Clears the way, has a bit of a pullback, and then you expect that secondary leg higher. And that's what played out beautifully. So on that secondary leg, I think I took it around 27. So what I see playing out now, and what we're looking for, just take away all that, that's our base, which this first leg has moved up from. What I'm looking for is that you can see that there's a high low here. We've got a bit of contraction, what we're looking for. Contraction there, flag, whatever you want to call it. Well, it was only yesterday when it broke up through 30. I do like that off the daily, and I'm potentially that move up there. If you take that from 13 up to, say, 33, 20 cents. If you take that from 25 to 45, that's okay. There you go. Takes us straight up towards those highs. So if we get the same distance move up as we did off the first leg, that puts us straight up into that resistance zone. So there's potential for this to push up to 45. There's potential to blow straight through it. We don't know what's going to happen. But I've got a plan of attack now. I know, is there some fat in this trade? Potentially through 30, there would have been yesterday. Buying it through 30. Your risk is just below this high low here, but around 25. What's that, 5 or 6, say 7 cents risk. What's your potential gain at 33 up to 45? 12? Is that 2 to 1? Close to 2 to 1. 1.5 to 2 to 1. Okay, that's a worthwhile trade, worthwhile taking, especially if there's potential for this to blow through 45. and just continue on its merry leg higher. Because don't forget, on the weekly, that's one leg up. This is potentially the second leg up, and you split that down in the daily of maybe a couple of legs, who knows. Is that making sense, just the way we're analysing this and the reasons why it could be a good payout trade on the daily basis? I hope that's making sense. Paul, you fundamentalist, is that making sense? The only thing I didn't quite like about this, I think, is just the weekly chart, really. You can see that weekly up here, it's getting a bit extended, so we might see a bit of a retest down here. You know, it's going to drag in a few buyers. Maybe on the weekly basis, it hasn't done enough work. There might be some, you know, capped at that 32, pull back, make another inside high low, but spend a few weeks doing it, and then off she goes. I'd rather the MAs catch up a bit. All right, I think that's probably... I hope that all makes sense what we've chatted about today, guys. I hope that's helpful. I think after speaking to a few of you, and I know there's been quite a few of you that have been following us for a while, just by seeing what you're putting up, the trades you're looking at, I think no issue with seeing, you're starting to really see the, you know, some good solid structure. You're seeing some good trading opportunities. So I think the next step is to try to train yourself on how you attack it, your style once you're in the trade, what you're looking for, how you're trying to take the trade, how you're trying to manage your trade, all that sort of stuff. And I think that's what I found over the last few years, especially. Entries have got a lot better. Entries have never been too much of a problem, but it's the profit taking that's always been my problem. You know, I'm happy to take. I was always happy to take 1 for 1, and hopefully I was sitting around 60% strike rate. I mean, that's going to make you money, but it's not going to make you good money. And then what I've been working on, once it's really every time I took my 20 trades, it would be the same thing over and over again. I think, geez, I wish I held that trade. Geez, I wish I held that trade. You know, there was no reason to get out of it when I did. Even if I took a partial, booked a few points, and then took the rest off at the same price if it didn't do nothing in 2 candles. And that was very annoying for me. So that's what I've always worked on, is just try to let it run. Still now, in the back of your head, you got it going, but a couple of taps on the back of the head knocks it away. But it's just, like I said, just try to get in a bit of a routine, try to manage yourself as much as the trade. All right. Fantastic. Thanks very much for joining us, guys. We'll be back in on Monday at 12:30 again. I hope that was helpful. If not, let me know, but nicely. If there's any questions on what we've discussed, feel free to send through an email to support@tradesetup.com.au. All right, I'll see if I can get back to you. Or if there's a chart you want to have a quick look at that you didn't put in today, just send it through to support, or even just wait till Monday and we'll analyse it then. All right, guys, thank you very much. Have a great weekend. I'll speak to you Monday.